Hey guys, thank you for watching this video. Don't forget to hit that thumbs up and subscribe. I'm putting out at least one video a week, giving you guys absolutely free content that's gonna help you guys, whether it's long-term, short-term, just in finance and everything like that. So with that being said, let's jump back to the video.
What is going on, guys? Welcome back to another video. In this video, I had a couple questions actually asked to me about, which indicators do I actually use? And to be 100% honest with you guys, I do not use a ton of indicators. I've developed strategies around them and stuff like that. Believe it or not, after watching the computer and studying charts for so long, again, I've been doing this for 7 years now, you kind of just get I've gotten to the point where I can look at a chart and kind of have a good guess at what direction we are going. And again, those things can change on the dime. Like, I'm aware that in the morning it can go a direction, and then at noon during lunchtime or 11, it can start turning back the other way. I'm very aware of how that works. And you're going to see that I'm going to end up taking a lot of trades probably around that noon area, and when I'm entering on some like credit spreads and things like that for swing trades, for instance, is what you would call them. So when it comes down to this, you're seeing Bollinger Bands here on this. This is a daily chart. Again, we can go to a 4-hour chart. We can go to whatever. And then down below, I have implied volatility. Why do I want the implied volatility on here? Well, I sell options. So I want to see where the implied volatility is in the market to kind of see, maybe I want to sell some calls today. Maybe I want to sell some puts. For instance, when the market starts dropping, and I think the 1-year, 1-day chart actually showed this better. It did. Okay, so let's go zoom in here. So when the market just starts dropping dramatically and hitting this bottom Bollinger Band, well, not instantly do I want to sell, but I do want to be looking now for possibly selling a put. Now, does that mean that it's going to crash to it possibly and I got to roll even further out? Sure, that could be the case. And again, rolling contracts is a great strategy if you get yourself into a sticky situation. But a lot of the times I like to sell calls. Now, why do I like to sell calls? I like to sell calls because markets don't crash upwards. Believe it or not, even if we go back, and it's not going to show it. Let's go to a monthly or a weekly chart, 3-year weekly chart. If we look back into this year, in 2020, you see we had this gigantic pull down. Obviously, the stock market crashed. And then, yes, we had one solid week of it running upwards. Or it looks like 3 weeks. Yeah, that's a weekly. This is a weekly chart. And then you get a pullback. But it's not making, it's making very, very solid moves. Do not get me wrong. In this area, you're probably not looking to exactly be trading a ton of it here. Now, again, you can, because implied volatility is so far up that you're actually going to get to take that trade. Now, I'm not saying it's the best trade in the world or anything like that, but let's move this up just a little bit here so you can see the whole implied volatility. So you're going to get this and normal. So what would be a normal trade in here, in this area where you see a range kind of, is going to be a lot different from here, because you're going to be able to get further and further out on the pricing chart. So for instance, instead of selling a 218, you're probably able to sell like a 180 or a 190 option when the price is only 218 and get a lot more value out of it during that point in time. And same with these, when you have it skyrocketing up, you can probably get further out here to the top of the Bollinger Band. And a lot of times this is the exact strategy that I'm doing. Is I like, if I'm going a month out, I will try to get to the top of this Bollinger Band or above it if I'm selling a call. For instance, when this came down here and hit, should have been looking to sell puts. That is just how it is. And you're going to see that the implied volatility spiked here. And that was going to basically mean that the puts all of a sudden became worth more because it went in that direction. You can sell the puts for more money, or the credit spreads, selling put credit spreads, meaning that the market's going to go up, not come down here and hit where you think where you're selling it at. And this is going to give you a better range, Now again, you can go to a 1 year, 1 day chart. I like to go to a 1 year, 1 day chart. It gives me a little bit more, and I'll find, again, if I want to sell calls right now, I would be looking more towards the 490, 495 level. Now, if I'm looking to sell a put here, I'm probably looking at the, I want to be well below this, because if you guys are selling puts, this is the biggest thing when selling puts. Markets do crash. Obviously, you had it from 470 to 426 in the matter of what, a week, 2 weeks. I mean, those are gigantic moves. So again, if I'm selling this is 447. I probably want to be down here at 390. Yeah, I would say I'd probably be 390, 395 is probably the highest I would want to go on this trade a month out. Because again, you want to get a month out to get the most theta burn out of those options, and that's why we go a month out. Now with that being said, you can let this move. Say it just chops over in here and it stays up in here and it doesn't ever get a big move. What I like to do, if it's staying steady, is I will cover those options. Say maybe I don't let them expire finally. And a lot of people don't like this, but me, I would rather take off the risk. And if it's moving downwards, I'll wait for a red day. And then I will put on another trade out further. And again, you guys got to remember, you're just trying to outperform the market. So you shouldn't be trying to make 15% every single month or 20% every single month. If you make 5% a month, that's a solid trade on your account. Now again, the average account is 10% a year for the S&P 500. I just want to be able to double that. I want to be able to make 20 to 25% every single year just doing this simple strategy. And if I own the stocks, I'm going to do a covered call. So again, these are the two indicators that I'm going to actually like to use. The Bollinger Bands, because again, they do kind of actually go with the market and they're going to kind of give me an action. You can do more research on them. That's all I'm going to leave there. And then the implied volatility, because I want to see where maybe I'm going to be able to make a move, get the most out of selling those trades or selling those options. So with that being said, thank you guys all for watching this video, and I look forward to seeing you guys in the next one.